Uh, cool. So for this session, I just wanted to go over with everyone supply and demand zone. So when you see I share my charts out, you'll generally see some support and resistance levels, but what's really driving how I chart and where I'm finding entries at is supply and demand. So I know a few people on this call have been using supply and demand as well. Like I know Mike has, I think Harrison has also. Gambino, did you how'd you learn? Did you just use the notes I had, or you looked up some videos on YouTube? Can you hear me? Can everyone else hear me?
Yeah, I can hear you.
Okay. No, I guess Mike can't hear me. All good. Um, all good. So yeah, I was just curious how Mike was going about it because so how I learned supply and demand was there's someone named Carmine Rosado. He had like a group, or he has a group still. His trading's changed a little bit where he uses more order flow now, but I really learned that from him. Someone else I met put me onto it, and it was super helpful. And it really laid the foundation for me with how I chart and making me. It really helped my game as far as being comfortable charting, even finding support and resistance levels, and overall just having a more comfort level with the charts. Because with supply and demand zones, you really have to kind of dig in and find origins of where these moves are coming from, right? And I'm not using an indicator to plot these zones. This is all manual. I do it. I know indicators do exist for supply and demand zones, but for me personally, I like going to chart the zones, right? Because it kind of shows you where that move originated, and you have an idea of when it comes back to that level of how you want to trade it, right? So that's going to be the plan for today. So I'm going to keep this mostly chart focused, and we'll go from there. So let me share my screen. Cool. Can everyone see my screen okay?
Yeah.
Cool.
Jay, can you hear me now?
Yeah, now I could.
Yeah, my computer wasn't letting me use my mic for some reason.
No, you're good. So yeah, Mike, who'd you learn supply and demand from, or how'd you learn it? Because I know you've been drawing zones yourself too.
So I never really used supply and demand pretty much until I'd say a month ago when I started really reading your charts. Obviously, the couple of videos you posted on YouTube, I do like Carmine as well. And I just kind of been slowly watching his videos, teaching myself, trying to draw them out, and they seem to be working pretty well. I'm just
Yeah, that's good. No, because even when you've asked me questions, your zones are aligning, or like you're calling out good spots for where you're finding zones. So I was just curious who you learned it from. So yeah, Carmine is who I learned it from. Um, and again, like I said, it's been super helpful for me. And I think after a while, it becomes very intuitive. It seems like a foreign concept, but like you could look at a chart and quickly start drawing zones once you have an idea for it. So SPY's a little messy. Let's see how Apple looks right now. Yeah, Apple, we had this zone that I drew the other day that worked. This is perfect. Let's see, it's this 3 hour zone. Yep, cool. So I'm just gonna draw this here. So someone in the chat had mentioned, hey, I'm looking at, we were talking about Apple being a good short opportunity. I'm like, yeah, 300 is like a psychological number. So I had that in mind. I'm like, oh, and perfect. There's 3 hour supply here, right? So how you find supply and demand zones is basically you're looking for a basing candle, right? And I don't know if you guys remember when we talked about candle structure and candlesticks. We spoke about different types of candlesticks. So a basing candle is really just a doji. It's an indecision candle. So something like this here, right? And you see when Apple, and I drew this way before you guys could see in the chat when I resent the chart today. I just happened to look at Apple. I'm like, oh crap, I didn't take this trade. I wish I did, but it was a great short off the supply zone. You could see we were tested it 1, 2, 3 times, and then boom, clean rejection here, right? So the reason I like supply and demand zones as opposed to support and resistance. So say, for example, we were just charting this here, right? And we didn't have any zones. And we're just using, let's say, a line of support or resistance. You kind of just have this one line and you're waiting for the market to come to this one line. And I'm not saying support and resistance doesn't work, because it very much does. It's just more for me for a visual thing. Like you have more of a zone you're working with, as opposed to this one line, you have an entire zone to work with, right? So this is a 3-hour time frame. It's a basing candle, and then I'll draw my zone like this. And I'll do that slower for you guys, just showing you an idea of why I like to have zones instead of support and resistance. I use a combination of both, but the majority of what I'm doing is going to be driven by supply and demand zones. I'm going to go off camera for a second because I want to pull up some notes I have. Hold on one second. Cool. All right. So the reason supply and demand works, or ideally it should work, is that I always talk about this when people say, oh, what happened when Apple went down? Why'd Apple go down? Why'd NBIS go up? At the end of the day, all it comes down to is buyers versus sellers, right? And supply and demand zones help identify points of the market where there's an imbalance period, okay? So the imbalance means the indecision candle, so your basing candle. Hold on, am I going to mute you for a second? I see like get some background. So your indecision candle will be something like, this could be a zone here. Let's find a cleaner one for us. This became invalidated, but this at one point, this red basing candle, this one right here, does everyone see that? Let's put a circle here. Circle. I can put a circle. All right, my circle thing's not working. It's fine. What is this? So this red candle right here, does everyone see that? So this candle here is representing a period of indecision. What that means is that when you have a basing candle like that, right, or a doji, something like that, one of these kind of candles, something similar to these, that means buyers and sellers are in agreement. If buyers or sellers are in agreement, price will not move anywhere. That's where the basing candle originates, right? It's a very important concept. Everything we're doing isn't based off of a basing candle. So it's a period of indecision in the market where buyers and sellers are in agreement, and it creates an imbalance in the market. Meaning the imbalance is because buyers aren't winning, sellers aren't winning. Like say in this candle right here, right? This big fat red candle. Sellers are winning on this candle. There's no indecision. Sellers had the decision, they're winning here, right? Even in this candle here, buyers had control here. Buyers had control here. Buyers had control, right? But then you have this basing candle where price really doesn't move, and you have that inside candle. Doji, basing candle, inside candle, I'll refer to as a basing candle, but this premise is key. So before I go forward, make sure everyone understands that, like, what a basing candle is and what that means. Does everyone get that? A quick yes from someone or a thumbs up would be great. Just
Yeah,
want to
brother,
make sure.
appreciate it.
Yeah.
Yes.
But it's like, it's really, yeah, it's crucial that you guys get this. And Mike, not you, Gambino, other Mike, I know you're don't have microphone access. So I get it. So, okay. I'm going to talk a bit before I go into more charting. So the period of imbalance. So remember when I told you guys before, say JP Morgan, right? Say they're like, all right, we want to load up, I don't know, $10 million worth of Apple, but we want our price at $290. Can JP Morgan just market order in $10 million worth of Apple? I mean, they can, but would they want to leverage market order in $10 million worth of Apple at $290? That's an open question, anyone. Would they want to do that if they want Apple at $290?
No.
Yeah, no is the correct answer. I mean, they can. The reason they won't put $10 million of their own money or $100 million of their own money in Apple at $290, because if they want it at $290, they are going to drive the price up by putting the amount of money they have in there, right? So that's a concept we all have to understand as retail traders. None of us here have enough money to move the market. Not even combined. Everyone combined can't move the market with the amount of money we have. But institutions can move the market. So for me, Billy, Brett, or anyone who wants to get into Apple at $290, they absolutely can, and it will not move the market because Apple is a trillion-dollar company, multi-trillion-dollar company, who their market cap is crazy. Like, we don't have enough capital to move the market. But JP Morgan, BlackRock, these other major financial institutions have the power to move the market, right? So with that in mind, still using the same concept, they want Apple at $290, right? If they're looking to enter that trade, they're not going to enter all at once. They'll set limit orders where orders are stacked in that area. So the idea behind demand zones or supply zones, they're resting orders in those zones that are from institutions. Okay. And the reason there's resting orders there is because they cannot enter the position all at once for the price they want. Does that concept make sense?
Yeah.
Okay, cool. So with that in mind, being they can't enter all at once, you create this period of imbalance where buyers and sellers are battling it out. But we're looking now for this zone to come back down. Let's say in a flip scenario, let's say it's JP Morgan who was selling Apple at this price here. They created this imbalance period here. The idea, I'm reason using this example is because the idea is when we're finding a basing candle to find our zones, we ideally want it to be the opposite color of the move happening. So when you're looking for a supply zone, you want to find ideally, I mean, this is not a set rule that everyone has to follow. I personally learned this way and I like it this way. You want to find a basing candle that's the opposite color of the move. So when you're finding a supply zone, we have a green candle here. When you're finding a demand zone, you have a red candle. And the idea behind that is that supply and demand, the premise is that institutions are stacking into these orders. And what do institutions want to do? They want to trick retail traders. So they're going to make it look like in real time that this is a bullish move. Price is going up. You have a green candle. Retail gets excited. But in reality, they're stacking orders here. They'll sell orders here for a sell-off, right? So when we come back and retest the zone, we want to see rejection here, right? To confirm that this is an actual confirmed supply zone, which we got. So the base rule of thumb with any supply zone is, or demand zone, is you want to find a basing candle first and then followed by some kind of move after it. So that's one thing to call out also. We have a lot of basing candles on this chart. This could be a basing candle maybe. These could both be basing candles. But what we're missing is the key ingredient is a strong move after. Those indicate a zone that's worthwhile. So the reason I marked this 3-hour zone was, and this wasn't, this, I forgot when I marked this. This wasn't here after. This didn't happen at this point. Those strong rejections there. This happened just this week. This is last week I charted this. The idea here is that I came here. I saw this basing candle here. Okay. What do we do now? We wait for price to get back up to the zone and watch for a reaction off of there. Okay. So I just sort of lay out those foundation basics for you. And I'm just going to go over for you how I come in and find zones. So I always say this with charting, you want to start as a top-down approach with your charts, meaning weekly, you could do weekly, you could do monthly, you could do daily, but you don't want to go too high up. You don't want to go monthly and start charting zones from 2024. I mean, you could if you want to find, but you do that if we're getting closer to this level, okay? But this is a quick example. You see right here. So there's there's a few different structures. So we're going to talk about bullish structure first and supply and demand. So the first type of demand zone that forms, you have a drop base rally or a rally base rally, okay? So this one here, even though it's a monthly chart, this is an example of a drop. You see the market's dropping, right? Dropping here. We have a base. This is your basing candle. This is a perfect basing candle. Perfect basing candle here. Okay. So what I do usually, I start, how I draw my zones is I start at the top of the body of the candle for demand. I have my time frames already set here. So I'll just templates, I have it templatized. So I just come and do that easily. Monthly. I barely do monthly, so it's an old color. Okay. So you draw the line from the top of the body of the basing candle, and the zone goes to the bottom of the wick of the candle. Okay. And this is a drop. Here, I'll write it here so it's on video. Drop. Whoop. Let's try this again. Okay, here we go. Drop, base, rally. Okay. I don't know where that went. What the heck? What's up with my chart? All right, we're not going to write it then, I guess. Does that make sense? Drop here, your basing candle, and then we rallied. Okay. And at this time, when this zone formed, we didn't know that it would come back and bounce, and it did perfectly, which is a good example of how these zones work. Okay, does that make sense to everyone? Drop base rally. Everyone got that one?
Yeah.
Yeah, brother. Thank you.
Gotcha. Cool. So the next type we see for a bullish structure when you're finding demand zones is a rally-based rally. Okay. So think of it's same concept, except you're not having a drop first, you're having a rally first. So let me go to let's go to a daily chart. Dailies will be easier. And also just showing you here, when I'm going to find zones, I'm looking for proximity of where I'm trading. I'm not going to just start drawing random zones like drawing Apple here at 170. Cool. I know there's a monthly demand zone here. What are the chances we're hitting 170 anytime soon? Not very likely. Okay. So my point is you want to draw zones that are more in proximity. Like this is a zone here, but this zone is huge. So when you get huge zones like this, what you want to do is this is why you start high and work lower. You want to find, this is a basing candle here, right? So you want to find some kind of action in this zone, more demand in this zone that can help you place a trade look better. Meaning that, okay, say I go ahead, I'm like, you know what, let me draw this monthly demand zone here. Okay, I draw this zone. Cool, we have the starting at the top of the body of the candle, draw it to the bottom of the wick. Cool. This zone is from $244 to $262. What can you do with that for an entry? Not much for like how we trade. Okay. So what you want to do next is come down to a smaller time frame. Boom. Look, we're on weekly. You have more demand here on a weekly. You have a little basing candle here. You have one here as well. It's kind of intuitive too. There's no right or wrong candles to draw off of. The biggest thing with supply and demand is after the basing candle, you want to see a strong move. That indicates a quality zone. Okay. But sometimes you'll have a basing candle followed by a weak move, and that's not necessarily a strong zone. This is a good example right here on a weekly. This did have a decent move, I guess, after, but you have a basing candle here, and this did work. No, it barely worked. You didn't even get a real rejection here after. Look at this. We'll do weekly. We have a zone here. I'm talking about this green basing candle right here, by the way, okay? So this is our weekly zone here. And the zone kind of worked, but we peeked over it a few times, broke down one time after, and then ripped through it. So the stronger zones are based off higher time frames and the reaction after the move, after the basing candle, okay? So back to where we're finding demand here. This is how we're treating large zones. So we know this is a large zone here. We go to weekly, we see, okay, there's some demand here also. Now let's go to daily. Daily, perfect. You have multiple zones here on the daily. How do you want to chart this? For me, I usually go for what move has the strongest reaction out of it. So like I said, I like this daily candle here because this one here, because we had multiple, or even this one here, because we had a gap up after. But you kind of see we're all kind of in alignment with from here, even from back here. This zone's been hitting every time. So let's draw this as a daily demand zone. We'll do it from, we can do it from this candle. This had a strong move after, right? So we have daily right here. And this is another example of a drop base rally, okay? I just wanted to show you kind of how you would work off of starting higher up because that's where you ideally want to start. Usually I'll do for how we're trading swing trades daily to 4 hour to 1 hour, kind of how the order I have here. Daily, 4 hour, 3 hour, 2 hour, 1 hour. I don't really go down to 5 minute too much. I'll try to do a higher time frame, but you see this daily zone here and how many times it tested and worked. Okay. And if you drew the zone from this first move here or even this move here, we got multiple tests here and it worked every time. All right. And then here's another example of a zone right here. I just want to show you guys a few examples of zones. Again, I'm looking for a red candle, a red basing candle followed by a strong move. This is a very strong daily candle. So this is a good zone as well. Let me pause for 1 second. This is just showing you some basing candles. Does everyone have a pretty decent understanding of what I'm looking for when finding a zone? Feel free to stop me if you have any questions, by the way. I could take a quick pause if anyone has questions right now. No questions yet? Okay, cool. I'm going to keep going then. Cool. So we found our drop base rally. The next one we'll look for is a rally base rally. Okay. So Apple, these are kind of, so this is the demand zone here. This worked briefly. So this is an example of rally base rally. Rallying here, you have a basing candle here and rally. So how you'd want to play that is you play up the test of the zone. So you know we have a rally base rally here. This is a daily zone again. Boom. Okay. So let's act like that move didn't happen. This happened here. Okay. Say you took this trade, you bounced, you made a few bucks on it, and you exited at 300. Say you did that. Now, say we come back to this zone and we cut through it. How I treat supply and demand zones is you do get support and resistance flips, but two concepts. One, with support and resistance, the same with supply and demand. The more times that zone or level is tested, in this case, we're talking about supply and demand zones, the more times this zone is tested, the weaker it gets. So remember when I had said that the idea behind supply and demand is that institutions are leveraging into these positions, but they can't get in all at one price. So they're stacking their orders. So every time, think about it, every time we tag that zone, more orders are absorbed, more orders are absorbed. Every time we tagged it, orders absorbed, orders absorbed. So the zone's getting weaker. So that's one thing to keep in mind. When we have multiple tests of a zone, usually it's getting weaker for demand and for supply. Okay. So that's something to keep in mind. And look, once the zone broke, it's not valid anymore. We get rid of the zone and then we look for, okay, what's next on our chart where we found a bounce at. Okay. So that's just an example for a rally base rally and then a drop base rally. So those are the first two to keep in mind for bullish structure: RBR, rally base rally, DBR, drop base rally. Okay. So that's what you're really looking for when you're finding demand zones itself. So on the flip side, when you're finding supply zones, there's two. You have a rally base drop or a drop base drop. And one thing to call out too is knowing market context. When we're in a strong uptrend, a bullish market like we have been, even though tide's been changing a bit recently, demand zones have more precedent over supply zones, meaning that you're not going to blindly short something because you hit a supply zone in a bull market. Use that more as your profit taking point as opposed to a spot where you're looking to short at. Okay. And the same concept for when we're in a downtrend. If, say, we unwind more and we start selling off heavy, your demand zones are less prevalent. You should use those as targets to take profit on your shorts. Does that make sense to everyone?
Yes.
Cool, cool. Okay. So now I'll show you some examples of supply zones. Does anyone have a chart they want me to go over? A large cap, pick any chart that's a large cap, not a small cap, please.
How about JPM?
Sure. Okay. So JPM had a fresh breakout today, made a new all-time high, rejected. This is probably coming lower. So here's the thing. If JPM, say this is a full-bodied green candle here, we would draw this zone as a demand zone. Being this candle looks weak like this, we don't want to draw that as a zone. That's not a strong demand zone for me. Does that make sense? Like we do have a basing candle and a move that happened up, but sellers rejected that entire move today. And this probably is going lower with that candle, that inverted hammer candle there. That makes sense, everyone, why we wouldn't draw this as a demand zone here.
Yes.
Cool. Okay. But for zones that could work here, we have, so I'll just show you what I would do if I was charting. I'd start at my daily. I'd look to see what I have. Say I was looking to enter long on JP Morgan. I'm looking, okay, there's demand here, there's demand here. That's really far away. We don't want to go that far away because that's not a viable trade location we're going to get. So let's go monthly. We'll see what we got. Nothing. Weekly, not much. Daily, not much here. So let's go to our 4 hour. Okay, on a 4 hour time frame, we do have this zone here, but I don't like that candle that much, so I'm not going to draw that zone. We have some moves here, basing candle kind of. We definitely have some demand here, but let's go down to 3 hour and see what we have. And the point of going through, cycling through like this is to find clean zones. Because if we look here, we have a clean zone right here, right? This is a clean zone. Again, we're not going to really focus too hard on that zone because it's far away. But just to show you an example of what a clean basing candle looks like by a strong move. This is a strong move after it. So that's one there. So I really just go by time frame and I'll look for the move after the basing candle that we have. So let's go 3 hour. 3 hour, we have one here. Let's just go to see what we have at 2 hour first. Yeah, kind of the same candle here. So we can mark this off also. Let's go to 1 hour to see. Okay, 1 hour, same thing. And also one time frame I do use that I like is 90-minute, an hour and a half. It's a custom time frame I put on here, and I also use 45-minute. You could find some good zones in those time frames. Let's just check 30 also. Okay, so we'll go back to where we are at 3 hour. We could say this is a zone here we could look at. So here's a zone here, 3 hour. Cool. And boom. We have a zone there, 3 hour zone. That's JPM. And then you obviously have some demand. And also too, you have to be kind of intuitive with it, because say just glancing at this chart, look at this action here. We don't have a clean zone to draw off of right here, but you see there's a lot of consolidation here. This is definitely an area of interest. So what you do is kind of just go by time frame and see where you can find a clean basing candle to get an entry. So this is one here, this 4 hour here. So you could draw one here if you want to do that. Okay, so I do 4 hour there. And again, it's kind of intuitive after a bit, but I always start higher and work lower to find my zones. And these are areas of interest you'd be looking to take longs off of. And what I do is, it's hard to monitor all these charts, so I set alerts at them if I'm looking for a retracement to one of these points. Okay, I'm gonna get off JPM for a second, but there's no supply zones right now. No clean supply zones, being just made a new all-time high today. Let's go. Anyone else have another chart?
Yeah, could you pull up a DoorDash?
Yeah, Dash is a good setup for sure. Okay, so Louis, same thing I would do here. I'm gonna start at daily, okay? So we're gonna start at the daily time frame and try to find some zones to work off here. And on a daily first glance, this is a perfect example of a supply zone here, because look how strong the move was after, okay? This is more of a drop base drop, okay? So you have a drop here, a lot of chop here, but then you have this 2 basing candles here. We'll go with this one because you want to go with the one that has the strongest move after. And look how strong the selling was after this. And the reason, like I said before, I like manually doing this is, okay, we're going to draw this daily supply zone now. This is a drop base drop, like I said. Let's draw this zone. And for supply zones, it's the opposite. You start at the bottom of the body of the candle. This is the body right here. This little green part here. Let me zoom in a bit so you guys can see more. Okay. Is that better? Everyone can see that?
Yeah.
Okay. So you start at the bottom of the body of the candle. Okay. And like I said, I have my template set. I'll do daily. And I'm going to make it red. And you could use whatever colors you want. I just like red and green for supply and demand zones. It makes the most sense to me logically. And then we draw the zone from the top of the wick to this here, okay? And that's one zone we have. So Louis, if you're trading Dash, we know that this is a pretty big target to hit. You see there's a lot of basing here, and look how strong the move was after we rejected it. So that's one to keep an eye on. If you're in Dash or looking to get in, this zone up here, we'll set an alert too. So when it tags it, we'll remember the reaction that happened, okay? And then part of what I talk about being intuitive is, okay, just glancing at this chart, you clearly see there's a rejection here at this 191 spot, okay? That's a resistance level clearly, but we know for a fact there's some supply within this area based off the action here. So what I do is, maybe there's not a clean supply zone on a daily. What I'll do is, let's go down to 4 hour. Okay, 4 hour, you got a wick through here. So we kind of broke out of this little resistance spot. It's not electronic trading hours. It is. Okay, good. Let's go 3 hour. Okay, cool. This is why I go back, you see, because when you go on lower time frames, you can find more zones. And we have something looks like a 3 hour here. This is not the cleanest basing candle, but you could see the reaction off of it. You have one here too. Let's go with this one here. This is kind of a basing candle here still, but we could go to 2 hour. I'm talking about this candle right here, by the way. Okay. You go to 2 hour. Let's do 1 hour. Okay. Yeah, this is fine. This is good enough. So 3 hour, 1 hour, whatever we want to use. It's kind of the same. I didn't move the line. You see it's the same basing candle here we're working off of, okay? Same thing here. Bottom of the body of the candle. This is a 1 hour zone. And then we're going to draw from, I'm going to draw from the top of this wick though to here. Okay, this is next to it, and we saw a little fake out above it. So we'll use that as another 1 hour zone we have. Okay. So that's just a general progression. And look, that zone tested and got rejected before. The zone originated from here. So it tested and got rejected. So Louis, that's another zone we want to look out for. So those are just two quick examples of supply, but let's say, okay, Louis, I know Brett called this one out. We're looking for an entry. Where are we going to enter dash at? For me, let's look. We see we have some reactions off of here, this 169 spot. We could mess with that and see what kind of zone we have here. We do have a zone here. This is kind of a large zone, like I said, from 169 to 163. But how are you going to get your entry? It's kind of a wide place to enter at. Like if you're just buying shares and holding for the rest of your life, sure, that works. But if you're trying to be precise about your entry, you kind of want to go down to a lower time frame and see where we could get in. So what I'll do is if I see a big zone like this, like we showed before with Apple, I'll draw the higher time frame zone, but work my way down after. So we have the daily now. Let's go to our 4 hour chart. Cool. We have some zones inside of it. We have a little action here, nothing too clean. Let's try to find a cleaner candle. One thing to call out too, Dash is not as liquid of a name as say Apple or Nvidia. So the candles might look a little messier, but you can still use supply and demand zones for it. It doesn't change anything. Let's go 2 hour, nothing super clean here. 1 hour. Okay. Honestly, in this case, what I'll do is I would combine using supply and demand zone with support and resistance, because this daily demand zone, while it is a large zone, you can see every time we test the top of the zone, we begin a good bounce from it. So you can kind of combine it with support and resistance. So if there's any support and resistance levels in here, we can see like, okay, we could draw a little line here just to reference that we know that this is some support within our zone. And that's like double confluence there. Okay, I know I have a zone with support in it, okay? Or we go on a 4 hour and see where else we had some moves at, or even a daily. Yeah, so this level here works. You could use the top of this daily candle from here if you want to do that. You could use this 166 level from the top of this daily candle here, which is prior resistance. So you might expect it to act as support. So that's how I would approach a zone where a large zone where you don't have too many clean, smaller zones within it. You could kind of combine support and resistance there. So the same concept, if you were doing it with supply, you could do the same thing with this demand zone, how I'm approaching with the levels inside the zone. So Louis, does that make sense for you for how I found these zones here? And I guess, Louis, I know you've been trading some larger caps that we've been calling out, but you kind of see how the candles aren't as clean on a name like Dash as compared to Nvidia. But I hope you catch the general gist of it there.
Yeah, no, that was perfect because I was just having trouble with like the bigger zones like you just showed, but combining the two strategies, that makes sense.
Yeah, and sometimes you'll find a zone within a zone. So you don't want to make your chart too messy. I'm big on chart hygiene because if your chart has too much clutter, you're not going to know what you're looking at when you go back to your chart, right? That's why you'll see me when I have certain things, I'll label it like, say, this was 6-1, June 1st, high of day. I'll label it because sometimes you'll mark something on your chart and you're like, where the hell did that level come from? You won't know. But let's say for this one, 6-1, high of day. So say tomorrow, Louis, or some point next week, we come down here, you're like, oh crap, we drew this zone and this is prior resistance. I might act as support now, and you have it right here. You know it's inside your zone and you have where the level came from. So I'm big on chart hygiene and making it clear to yourself. Even if you put notes on the side, that's fine. But I think why not throw a note on the chart, something little to reference where the zone came from or the level came from, you know? So that's how I would approach a larger zone within trading within a larger zone. Let's look at another chart here. Anyone have another chart you want to look at?
You want to do one that I love on
Yeah. Which ONDS?
Mm-hmm.
Yeah, that chart's be messy for me because I have plenty of levels on that one.
I
Yep.
do too.
Yeah. But okay, let's get rid of the support and resistance levels here. And I haven't changed this chart at all, right, Mike? You know, from way back when we were first talking about this, you got a lot of moves inside this range. And look, this daily demand, this daily supply zone, let's get rid of these other supply zones here. Let's just focus on.
Question, Jay. Now, with like the higher time frame zones are going to be harder to break through than the lower time frame ones, right? Push through.
Correct. Correct. And also too, something to keep in mind, Mike, is they might take more time to resolve, being it is a higher time frame. Meaning that if you're trading this intraday, you may not see an immediate rejection once we tag the zone. Okay. Like look how many times you came up deep into the zone. This is a pretty large zone too, which is where you want to use your support and resistance levels, or resistance in this case, to kind of gauge where we're at. Okay. And this is a good example of us creating a zone within a zone here, because this daily demand zone originated from this green basing candle here. Remember, I said I always look for an opposite color candle of the move we're looking for. So for a supply zone, you're looking for a green basing candle. For a demand zone, you're looking for a red basing candle, right? The idea behind that, like I said, is that institutions are trying to trick us to make the move look bullish or bearish. Bearish being with the demand zone, you'll have the red basing candle, and with the supply zone, you'll have the green basing candle, right? And the reason I said this is zone within a zone, because look, we tested here, we rejected a few times. But when we had that last strong move on ONDS, it came up here again. And this is a perfect example of a rally base drop. Okay. So we'll get rid of this zone here. So we'll focus here. Again, here's your rally move. Let's see if my arrows want to work this time. This is your rally move up here, right? Okay. Here's your rally. You have a clear move up. This is your base right here. This green candle, rally, base, drop. That's another structure we look for with supply zones. So, and this is a zone within a zone. So when we retest this zone, we're probably going to get another rejection here whenever we do come back up to it. But this is another daily demand zone that came out of this move on ONDS. And then, Mike, we also have another supply zone here. Sorry, daily supply zone here. And this is another drop, base, drop, which is another structure. So for supply zones, we have rally, base, drop. And also we have drop, base, drop. Okay. And this is another example of a large zone. So we'll start with the daily first, and then we'll go to lower time frames and see if we can find a zone within the zone. Okay. And again, we start at the bottom of the body of the basing candle, and we draw it to the upper wick here. That's for supply. For demand, it's the opposite. Remember that. Okay. So what I would do in this case, Mike, I would look and say, okay, this is a pretty large zone. If you're trading ONDS, you know, it's a smaller market cap play. It's only at $8 right now, or under $8. So a whole dollar on this of a zone is a pretty big zone for this name, because that's a large percentage of how it would move. So we could come here and go to a 4-hour and find zones within zones. So you have this 4-hour zone right here. This is perfect here. You could use this for your 4-hour zone, or if you want to use this for your 4-hour zone, you could do that. But you could also just kind of throw a line in here and just mark 4 hours while keeping this bigger supply zone here, to daily zone here, just knowing that there's a 4-hour here and there's a 4-hour kind of right here too. Okay. And then let's look, Mike, now ONDS. Okay. We've been selling off pretty hard on this name, but we got a bounce here today. Where did we bounce from? Let's see. We bounced from lows of December 16th of 2025. So now we don't have a clean demand zone here. You could use a support level if you want, or you could go down time frame, go to your 4 hours, see if we have demand here. Nothing too clean here. You do have a 4 hour zone here. We could draw this though. Or there's one here also. These are two examples of good zones here. I like this one a lot because look how strong this move is after. So Mike, if we come down near like $7 on ONDS, if the market decides to hold up, that could be a good entry point. It's also, I like when zones are close to like a round number. So this is in line with $7 and you have a strong reaction. This is a very good zone because look how strong the candle is after this zone. But we're still trying to find where we bounced it from today. So let me go to 3 hour. No. Let me see something on my bad. Where are we at? Oh yeah, we're at 7:31. No, nothing really standing out there. Yeah, and this is what, like, when I post these charts, guys, like, I'm not just doing this now to show you, like, oh, like, for fun. This is actually what I'm doing. Like, going down to lower time frames, finding these zones. And then again, like, this is not the cleanest zone, but you know we have a reaction here. The market bounced here a few times, so clearly we like the zone. You go ahead and draw based off this red candle here to the side. Let me just go to a 90-minute, see if we have one there. Yeah, we could go with that. Let's do 90-minute. We could call it 90-minute here. We bounced here today. I'm sure if we went lower, we could find a cleaner zone, but we'll go with 90-minute for this right now. So this is a zone we have here. And boom, we got to bounce out of it today. But now the issue is, Mike, we have a lot of, so remember what I said before, in a downtrend, supply zones hold more precedent or they hold more weight. So we have a pretty strong daily supply zone here. So the issue now is we could long this based off where we're bouncing at, but we have a lot of supply to work through. From a daily time frame, we have this 923 level we have, or yep, about 923 we have. So like I said, bottom of the body of the candle, we'll draw the zone from the top of the wick down here. Change the color to red. Let's look at 4 hour. Yeah, we have a lot of supply to work through, Mike. So you see, like, we have so much to work through. Like, even for this, there's a 4 hour zone here. And I'm kind of doing it quick to show you guys, like, when I first started learning about these zones, it seemed like a foreign concept. But once you know that you're looking for a basing candle followed by a strong move, it's pretty simple. It's not that hard, and it really helps you hone in on your chart to find the levels where price is reacting at. So I like to take notes about it, and when you see me formulate a game plan, I'll share with you guys. I'll say, hey, this zone here created a strong sell-off. Watch out for this zone. Or, hey, we bounced off this demand zone prior. Watch for reaction. We go to this zone. So, excuse me. Now, drawing zones is one thing. How to play them is a whole nother story, okay? So the general rule of thumb is just because we enter a zone does not mean you blindly long it at demand and does not mean you blindly short it at supply, okay? What you're looking for anytime you touch one of these zones is for the reaction off the zones. The same way with any kind of plays. You're looking for, let's say, I like to usually enter maybe on a 5-minute time frame where you're looking at a 5-minute chart. Or you could do, if you're swing trading, you could do 15 or 30-minute. But what you want to see is a strong reaction out of the zone. So, or if you're shorting, a strong rejection off the zone. So here, look, we came deep into the zone and then finally bounced the bottom of it. So you might want to wait till this 5-minute candle closes and then enter, okay? And then we came back here and still held, so you were good, okay? Let's go to SPY. You probably find a better example on SPY to show you how to trade zones. SPY looks gross right now. Sheesh. Yeah, a lot of charts are looking nasty right now. Okay, let's use this example though. Let's say, actually, no, we'll go back to Apple really quick. Sorry, guys. Apple, because we had that supply zone we were talking about at 300, around 300. I think we had a 3 hour zone, right? Yep, we had that 3 hour zone. So if I was looking to short Apple on this move, one, I'd be probably on a 5-minute time frame. And two, I would be looking for the reaction off the zone itself. So the first time we tested the zone, it looked pretty bullish right here. Let's say we made it pretty far into the zone. You want to see these kind of rejection candles taking place here, or say you were hesitant here, you don't want to get in just yet. We came back up and retested the zone. This is a better reaction here. You have the strong upper wick, the long upper wick off the rejection here that shows sellers have control, and boom, he came back down. And this offered a few trades off of this zone. This one came just short of it, but right here, this tagged it exactly. You have the upper wick there, red candle after, and then you can enter on the close of this next candle here. Okay, on a 5-minute time frame, and boom. That's how you want to treat it. And then again, this scenario here, this is a little harder to take. Maybe you want to take it off the break of the zone after we're coming out of the zone here. Like right here. Okay. You get a 5-minute candle close out of the zone. You get a short here. And eventually it worked pretty well. So multiple times you could have traded this zone for shorts. Okay. And again, this is a higher time frame zone. Not only was it 3-hour here, you kind of have the daily. You see the daily is kind of in line with it as well. No, what was it? I guess you do have some daily supply here too. But either way, 3-hour time frame is a higher time frame. So it's a pretty strong zone we have. And it's also, like I said, in line with 300. So a lot of times what market makers do, they'll come to a key level. Everyone's like, oh, I want to short Apple at 300. But guess what? Apple went to 302, 302.44. 301.5 to try to fake people out, and then you still get that breakdown. So which is why I like zones, because say you just had a resistance line at 300 here, you would have got faked out a lot of times if we were trying to short this. But with the zone, you kind of see we never invalidated the zone. We came deeper into the zone, but we never invalidated it, and it was a really good short. So does that make sense on how you want to enter a zone or how you want to enter the trade?
Yeah, I see what you're saying, because before I started using supply and demand, it was support and resistance, and without having the supply and demand, you'd push through, or you get faked out.
Yeah,
That started to really change my game plan a little bit.
yeah, but I feel like with a single line, sometimes it's too precise. And like I always say too, market makers love failed breakouts, especially at key levels. So you'll see 300 break, everyone gets excited, like, oh shoot, we're breaking 300 on Apple. I'm going to get in at 300. And they go to 302, they're excited, like, oh crap, we're at 302 now. And then guess what? They'll fake you out. Some of the prime setups are failed breakouts and failed breakdowns. So zones kind of help with that too, because they're not as precise as just having one set line. You have a zone you're working off of. And again, the zone needs to be some specific still too. You don't want to be too wide or too large of a zone. The really important thing to watch for is candlestick structure out of that zone. So the same thing with a demand zone where you want to see, let's see, a demand zone. How's Mu looking right now? Look how long I've been charting that Mu for. God, this chart's a mess. Yeah, but you have some 4-hour supply here now forming on it. Okay, we could draw this zone here. 4-hour. And then you have some demand right here. You can probably find a cleaner demand zone here. You can find an old zone to work off of, maybe from you. This one's solid here. 4-hour here about. I just want to go to old zone to show you guys what you'd be looking for reaction off of the zone. But honestly, this is a pretty good one because you have this little pullback here that got bought up. So let's see. Yeah, so Mu came back to the zone. You printed the higher time frame demand here. We came back to the zone and even retraced far into the zone. It came literally to the top of the zone barely and bounced. So the key is, I'm just like, kind of with any trade you're taking, is you need confirmation, right? You can't just blindly enter a trade because you hit a level. Same thing with Billy's plays, Brett's plays, my plays. You don't want to just blindly long it, but it's at VWAP. You want to see a strong move of VWAP. Same concept with supply and demand zones. You don't want to blindly long it at supply or blindly short it. Sorry, blindly long it at demand or blindly short it at supply because you're there. You want to see the reaction off of it to confirm that that zone is working. Does that make sense to everyone? All right. So that's pretty much what I wanted to show you guys for basics. I don't want to go too deep into detail, but I would say if I had to sum it up for finding zones, look for a basing candle, the opposite color of the zone you're looking for. For a supply zone, you're looking for a green basing candle. For a demand zone, you're looking for a red basing candle. Okay. And always start top down. So my general progression, I'll do daily, 4 hour. I'll go through 3, 2, and 1. You don't have to do that if you want to. You could do daily, 4 hour, 1 hour, 30, 15. But whatever time frames you like, base it off of that. But always start higher to lower, and you see why, because when I showed you that higher time frame demand zone, sometimes you get a large zone. And also with those large zones, they're hard to trade off of. So you want to go into a lower time frame to find a more precise trade location you could take within that zone. Okay. So I would say that. And then also too, the second piece is for your demand zones. You're looking for the red basing candle, opposite color, like I said, of the actual move you're looking for, and then play reaction. And I'll throw some notes. I might have notes in the chat too. The general structure you'll have is a rally-based rally, which is the bullish structure. So you'll have your rally, a basing candle, and then a rally again. That confirms your demand. And then the same thing with the supply zone. You have a drop base rally. So this is a drop, your basing candle here. Sorry, drop base drop for supply. This is drop base drop. Or you could have a rally base right here, right? And then drop. So those are pretty much the structures you look for in finding supply and demand zones. But I think there's more to it that you kind of learn as you're charting the zones. I would start with just getting comfortable with going on a chart and finding zones for yourself, okay? And again, every basing candle doesn't qualify as a zone. It's the move after it that makes it a quality zone. So don't forget that. Cool. Does anyone have any questions, any other charts you want me to go over to find zones on, or just general questions?
I think that's good advice, Jay.
Thanks, Kyle. Kyle, you
know-
just use support and resistance really, all right?
Yeah, but I chart it. I basically find my levels the same way you were talking about, just higher time frames to lower time frames, you know?
Yep, yep. Because you'll find sometimes on the higher time frame, I'm sure you'll have alignment at the lower time frame as well for those levels you're looking for.
Yep, exactly. It pretty much just works out sometimes that way.
Exactly. Anyone have any charts they want to look at? Any questions of supply and demand or charting stuff in general? All right. Well, if no one has any questions, I'm good to wrap it up here. I'll send the recording out, but I'll give you guys one more chance. Questions? Everyone comfortable? Did that make sense to everyone at least?
Yeah, that was great, brother. Thank you.
Okay,
Yeah,
gotcha.
that was perfect, Jay. I appreciate it.
Yeah,
No problem.
definitely clarified.
Cool. Well, I guess I explained it good enough that there's no questions. But yeah, I don't want to get too far into it. Just keep it simple. Like I said, basing candle followed by a strong move in whichever direction you're looking to chart, whether it's supply or demand. And while you guys are trying to get comfortable with this and finding your zones and whatnot, feel free to drop it in the chat if you find a zone somewhere and you're curious if I think that's a good zone or not. Let me know. Feel free to ask questions as always. All right.
Thanks,
Appreciate
man.
it.
Cool, man.
Cool.
Thank you.
All right, everyone. Have a good night.
Peace.
You too.
Thank you.